Today's our review of the previous week's activities, as well as our review of the upcoming week's trading activities. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. Also wanted to thank our Patreon supporters, as well as our those of you who choose to subscribe if you enjoy this show. So what we wanted to review this is our post last week, pre next week. Next week is the 12th of June. This week is the 5th ending. So we're kind of in our quiet period starts at the end of next week, at which point we start to expect all the numbers that are coming in on Tesla to really have an impact. So I think the excitement level is building because it looks like the numbers will come in as anticipated from Tesla. I wanted to cover probably 5 things today. First is we just went by and did a quick review of our local facility to determine what's going on there. So we're going to post some photos over my shoulder regarding that so you can get a feel for what cars on ground look like. In general, what we found was that things are kind of thin. There are some cars for testing outside. There were some sort of nice colors of vehicles that you'll see here going over my shoulder. But in general, there's actually no cars sitting in a showroom. They're very light on inventory right now as they work to build back up from the stop of production that's gone on. The next thing we wanted to review is sort of what happened last week. I'd call it the Mike Tyson trade that we saw midweek, and it sort of confirms some of the things we talked about, which is basically that the stock is moving around a lot during the week. In some cases, you're getting 20, 30, 40-point drops that imply that the stock may drive very much severely down, and then all of a sudden it recovers. And so this is why I kind of did this show called Mike Tyson Trading, and sort of included it as a show that we did. I wanted to note that I'm joined today by the Semi, and if you have any questions about it, happy to answer. We just got it this week, and happy to give info if you have any interest in learning more. Please drop us a note. The next thing that we wanted to review is kind of, let's look at the end of the week pin. Typically that happens on Friday. On this Friday, the stock was actually up, but I would say that the severe pin number is what's going to happen as it head towards 900, which it did not cross before the end of the day. And so as we've discussed previously, those 00s are very important numbers when it comes to pins, etc. And if everyone is anticipating a rising stock price like that, the market makers really like to hold it back from getting to its full levels as a way to make money off of that. So we definitely saw that occur this week. Without any other catalysts like analyst upgrades, etc., we're very much expecting a similar week, this coming week to this past week. One has to be ready for severe drops in price just in case. Tesla has a 10 to 15 to 20 point trading range on a daily basis, and it seems like the amplitude or the up and downness of the stock seems to be bouncing around a lot more as we start getting closer to the end of the quarter, which should not be unexpected. The next thing that we wanted to review is just the fact that as we head into week 2, Tesla does have its pattern of fairly strong Mondays and Tuesdays, and then Wednesdays kind of down or mid-range, and then as we get into Thursday, we really look for how the market makers might execute as some kind of a pin to pin that stock as low as possible if people are anticipating rising values, or vice versa, if they're expecting dropping, sort of forcing it upward to punish those who've been on the short side. The big surprise for me / everyone else is, why is it the market is up 900 points and Tesla barely gains $10? And this happened with Shopify and some of the other names that have been sort of the primary drivers of value for stock market recently. Excellent question. And after reviewing my notes today as I was preparing for this show, what I realized is the whole idea of attention. In the short term, there's attention that's given by the hedge funds to whatever is really moving. And when you had a 900-point move, where the airlines in particular, but a lot of other entities that were dependent on a rise in economy, were actually in motion, there was good reason for those folks to put attention on other stocks than Tesla, Shopify, mainly some of the ones that have been getting most of the action in recent weeks. Now, one of the things that I'd have to say I'm surprised by, still trying to figure out how one balances this out, is the whole idea that there was a concern by the government that if they gave away the stimulus checks of $600 per person, we'd have a large number of people who would decide that they were getting paid more to not go to work than to go back to work. And so it seemed that this might actually jeopardize the economy. The one problem with that logic, though, is that there's this issue that lurks, which is if you are offered a job back from the company you're working for or by another company and you turn it down, you potentially lose your unemployment benefits. So the strong recovery in jobs this week is a reflection of the fact that the benefits could run out in July, as well as the fact that folks have no choice but to accept work. Otherwise, they potentially lose both the jobs that they were offered and the unemployment benefits. So the one thing I couldn't understand in the whole conversation of this unemployed and the economy doing badly is there was an argument that, oh, look at all the jobs that have been lost, everything's terrible. And now that, we're kind of nearing benefits ending, there are a lot of people that are saying, I'd like to get back to work. And so the net of all this is obviously people are getting back to work and doing so with authority, and it's reflective in the reduced unemployment rate. I think the second half, after the first 500 points, really reflected the fact that there's the anticipation that the first round of people returning to work will just be extended as we go further on. And as all those people go back to work, they're not able to start making payments of all sorts, which also helps the economy to move back to a healthy zone. So I would expect a rippling effect of this going from initially the front end and then rotating all the way through the remainder of the economy. So I think that what this means then is, if in fact positive news like this is going to keep rolling in, we would expect the market to actually start doing very well, and Tesla to definitely get some participation in that. But it's actually enjoyed a nice run so far, and it also suffers the challenge of the fact that it didn't suffer the huge downgrades that some of the companies recovering right now are doing. So Tesla's up 20, 30 points maybe in the next week or so, 10 days, while companies like some of the cruise ship lines or airlines or people really dependent upon the restart of air travel, etc., will all of a sudden start getting a lot of support and attention from the marketplace. And the upside on a percentage basis is much higher for these stocks that have been beat down than they are for things like what's going on with a company like Tesla that's been doing very well throughout the pandemic because of how they're structured. So I guess what we'd like to say is congratulations for those who are currently recovering. Tesla has done a lot of its own recovering already, so we're pleased to see that. We'd love to actually see some more points increase from Tesla, but it looks like we're going to have to wait for the severe above $900 zone to enter after we push towards earnings. And there aren't any hookups showing up like shutdown of plants suddenly or other sort of factors that were not anticipated. So, in general, our trade anticipation is sort of more of the same. 900 is still a kryptonite that seems to hold up Tesla once it gets there. It seems to bounce back down into the high 870s or mid 880s as sort of a comfort zone before moving back up into those mid 90s in price range.